All right. Welcome. It's not Friday evening, it's Sunday evening. I'm 2 days late simply because internet connection was terrible where I was. Um, so I'm back at it, back at home, and hey, ready to rock for next week. So let's go over I keep getting this wrong, now 9 markets. So tomorrow, that's Monday the 6th, I'll be starting the full analysis of S&P 500, silver, and US 10-year notes for full subscribers. So that'll be added to your nightly analysis kind of roundup. So let's start on Eurodollar here. And obviously, for anybody who wants to to add those packages or them new markets to their membership, give me an email or drop me an email, or otherwise you can log into your account and you can go through the checkout process and your account will be updated automatically. So you can check out the membership page to see if any of those suit you. Okay, so this is Eurodollar. I'm going to do the same thing. We're going to go over the 9 markets. I'm going to go from the 4-hour chart down to the hourly chart, and then we'll see what the market may have installed for us next week. Okay, so this is Eurodollar, and I'm going to try and keep this short. I have this horrible tendency, like I'm doing right now, to just waffle on for too long. Okay, so Eurodollar 4-hour. Okay, so we're for a long time we've been tracking this 5 waves down. So wave 1, wave 2, extended wave 3, contracting triangle wave 4, and wave 5. Looks like wave 5 green here has now begun off the end of that contracting triangle. We should see confirmation of that this probably by Tuesday or Wednesday. There's still an alternate account which views this contracting triangle as part of wave 3. So that if that's the case, well, then we'll see further downside develop, and it won't really affect the outlook for now. Okay, so let's get down to the hourly chart. You can see there's the closing triangle there. It looks like on was that Wednesday or Thursday, whatever it was, Wednesday, I think. The high there Wednesday closed out wave C, and now we had a nice looks like it could still be ongoing, this 5-wave pattern to the downside. We could have an extending 3rd wave and a 4th wave here, so we might see another dip on Monday morning or the overnight, let's say tonight, before we start to see any rise in wave 2. So I like to use the oscillating, the 50% oscillation point for a triangle as a kind of a resistance point for the breakout of the triangle. So we should see, let's say, the initial resistance form at around 116.70. What's that? 116.79. So 116.80. I'd like to see wave 2 complete below that, and then we should see a kind of an acceleration down in a 3rd wave. So that would be wave 3 of wave 1 of wave 5. So there is potential for a large, further large decline in Eurodollar kind of dead ahead. Okay, so let's go down to pound dollar. And for now, this is the 4-hour chart. And it hasn't been updated in a few days, so forgive me while I move around some labels here. So I'm looking at the same kind of thing here in Eurodollar, only pound dollar. Only pound dollar seems to be kind of one step ahead of Eurodollar at this stage, and wave 4 finished about a week and a half ago, and now we're moving down into wave 3 of wave 5 of wave 1. And again, this is a one lower degree than Eurodollar also. So again, the potential for downside is quite large in pound dollar from here. So we're moving down into a 5th wave of a 1st wave. Okay, so here is the hourly chart. You can see that that's the end of the contracted triangle, wave 4, wave 1, 3 waves up in wave 2, and we look to be moving down in wave 3 of 3. But the only kind of let's say confounding factor right now is the the possibility of an alternate, larger degree. Either we have wave 1 here complete and we're moving at an alternate larger degree wave 2, or we have wave 1 pink here complete and now we're tracing out a larger degree wave 2 pink. So the critical level for that, either way, we could call this an alternate wave 2 over here, and we could move that alternate sign down. The critical level is the high of wave 4, which was 132.29. So that 132.29 high is the kind of pivot point, or the kind of critical level for triggering the larger alternate count. So we'll see the kind of first alternate will be a larger wave 2, and we'll see if we get a turn up on Monday and we start seeing a larger three wave pattern develop, then we'll kind of switch to that. The idea of a larger wave 2 off the end of wave 1 here. Okay, so let's move on to dollar yen. There's the 4-hour chart dollar yen. Okay, we've kind of adopted the idea of a larger wave 2, and it would be most likely an expanded flat, so 3 waves down in A, 3 waves up. There were very large 3 waves up in wave B, and we should be seeing either 3 or 5 waves down, depending on it could be a double combination as well. So depending on how that works out. The key level for confirming this larger degree wave 2 is this internal B wave here. So that level there at about 109.30. If we get a break below 109.30, then we will confirm the fact that this is a C wave decline. Otherwise, we could be getting a 1-2-1-2 pattern, which is even more bullish in the short term. This pattern in general is very bullish for the medium to long term. So I expect we're moving up in a very large degree, wave 3 of C to the upside. Okay, so the hourly chart looks like we have wave 1 down complete. That could be wave 1 or A, so you could also label that wave A. So that could be 1, 2, and we're moving down in wave 3, or it could be A, B, and we're moving down in wave C. Either way, the initial target is about 107.99, so about 108 would be the initial support, which would be the previous wave A. So that would be the kind of expected minimum target for wave C. So during the week, we're expecting further declines in dollar yen, and with an eye on 109.30 to see if that causes an impulsive spike to the upside. If it does, well, then we could be looking at the more bullish count in the short term. Okay, so let's get on to the Dow. Again, the Dow is kind of eternally confounding. Stocks in general are eternally confounding these days, but it looks there's a decent chance that we have a completed wave 2 here, and we're moving down into a third wave. But we really do need confirmation at kind of a higher degree, 5 waves move to the downside. So that would be the kind of outlook for this week, is to see if we complete that wave 2. So far, we seem to have 3 waves down off that wave 2 high, so that would be the alternate there. And let's get to the shorter term, the hourly chart here, just to see. So that's the high that we're calling wave 2 at the moment, and that's at 25,587. And you can see that it's possible 3 waves down with a sharp rally in a possible 3 waves down in an alternate wave 4 with a sharp rally moving up into an alternate wave 5. That's the alternate count. You can also view this as a 1-2 pattern, which would be the thing that kind of confounds me at the moment is that off the low there we have a 3 waves, 3 wave rise so far, and that could be speaking to either a running flat or maybe a combination or double combination maybe, or something like that. So it has a corrective form to it, and it's a corrective rise, so we can still call that a wave 2. The only thing that will confirm that is if we get early this week, if we get a sharp sell-off again down into a possible third wave. Okay, so that's what we're watching for the Dow. Okay, so let's move on. See if I can find the next chart. Where are you going? Okay, gold. So this is gold. We had a nice spike here on Friday, which is, again, it's the reason I'm quite bullish on gold is I can see a long-term, large degree corrective pattern pretty much complete, and every we're at the point where every move to the upside could well be the start of the next large degree move up. So hence the reason I'm kind of tentatively bullish on the very short term. So I'm definitely bullish on the long term, but the fact that we're so close to the end of this large pattern here means that any move in the upward direction, I'm kind of tentatively calling the start of the next move up. So, but we do need confirmation, just like on the opposite side, we need confirmation to the downside, and Dow we need confirmation to the upside in gold. So we could have an ending diagonal here in wave 5. We hit this significant support there at 1204, and the reason that is significant support, I think the low on Friday was 1205 even. So 1204.96 is the significant support level. And the reason I'm calling that a significant support level is if we cast our mind back here, almost, what was this? Definitely, it's a year ago anyway. So that would be the previous wave 2 at one lower degree. Am I talking? Hold on. I should be on the 4-hour chart. Sorry. Sorry, 1204.95. So 1204.96. Sorry. Why is that a significant support level? It's because it's the previous low of the low of the previous fourth wave at one lesser degree, and the actual low was 1204.39, I think. So the reason it's a significant support level is that it's a common target in Elliott Wave. Let's say they're not an Elliott Wave rule, but an Elliott Wave guideline, and it's a pretty significant Elliott Wave guideline. So a retracement to the level of the previous fourth wave at one lesser degree is a pretty decent target to have in any retracement. So we've hit that level, and we've had a nice bounce off it on Friday. So let's take a look at the bounce on Friday off 1205. So we had a sharp move up and took out some previous lows of last week. So during the week we had these little spike lows, and the rally on Friday took out those previous lows. So what I want to see is 5 waves up develop at least let's say the next degree higher, which would be wave 1 in brown there. So I want to see 5 waves in pink develop to the upside. We want to be able to call it a clear 5 waves. But I'm definitely, it's pointing in that direction. In the larger degree count, it's pointing that direction. What I want to do is catch it on the shorter term charts. So I think we're getting to that point. It's just patience and endeavor that'll bring us there at this stage. So that's what I'm watching for this week is indications of 5 waves up to complete this large degree correction. Okay, so let's move on to crude oil. This is the 4-hour chart in crude oil. What I've been pointing out over the last while is that we could have wave C of wave 4 complete, and that completed in a large degree, 5 waves up. As you can see there, off the October lows of October lows of 2017. So this is the large bull market bull rally that we caught last year, and the initial high here that tagged the upper trend line, that was kind of like a false dawn really, back in April or May there. So we had a nice sharp move off that, but it turned out to be taken out later on in June. So move off that high has been in 5 waves. The move off the obviously, sorry, the early July high, the 3rd of July, that's been in 5 waves so far, and we seem to have a corrective rally off that, and price is kind of hitting resistance at the 200 period moving average there. So what we're watching now is 5 waves down. Have we got a 5 waves down and 3 waves up impulse wave complete? And if so, well, then we can say sayonara to crude oil prices for a while. So that's the recent high there. I think we've got 5 waves down complete in wave 1 grey. We may be still working on wave 2, and that'll be the alternate count there. So the idea for early next week is to see if we got this interim high. If this interim high holds, and we get a move down, again, a further lower degree impulse wave down. So we've got 5 waves down, 3 waves up, and we get a break of support again. Well, that'll kind of confirm the more bearish current operating wave count. So that's what we're watching for this week, is a signal, a pretty decent sell signal in crude oil. We'll see if that happens. Okay, now move on to the S&P. In the S&P, the pattern is slightly different than the Dow. I think we have a 3-wave pattern, 3 waves up in A, 3 waves down in B, and an ending diagonal wave, C wave of 2. So again, the short-term pattern still has to confirm that the high is in place, but that's what we're working with at the moment. 3 waves, an ending diagonal is characterized with 3 internal waves within every wave. So we have 5 threes basically. So we have 3 waves up in 1, 3 waves down in 2, 3 waves up in 3, 3 and 4, and 3 and 5. We had the trend lining, this converging trend line held pretty well throughout, and the recent high, we sold off 2 trend lines there. So again, we're at a kind of a tentatively interesting point in the S&P, but we had a nice sharp rally there on Thursday and Friday. So we will see how that works out early this week. I'll dive in deeper into that over the coming days to see if we get this developing in our favor. Otherwise, the recent all-time high, at 28.72, that is the high to watch for the moment. This could even be tracing out a larger degree ending diagonal in a 5th wave. So that's kind of what we have to, let's say, parse out between now and the end of the week, let's say. Okay, so let's move on to silver. Silver might be a little bit further along than gold. A little bit lagging in gold in the fact that we could still see one dip down in a final 5th wave, unless we have a failed 5th wave already in place, down into the kind of the 1480 level. All right, let's look at that's the larger, the 4-hour chart. It's hard to actually, there's the daily chart. That's the best way to view this. So we had a wave 1 rally in 2016, up into 2 years ago now, that high. So it's taken 2 years for the steam to boil off in this correction. So we've corrective move down in wave A, 3 waves up in wave B, and now we're looking at 3 waves down, I think, in wave C. And the alternate count is that we have already wave 1 and we're completing wave 2. So either way, we're completing a correction at one degree of trend or other. Let's get into the hourly chart. So I think we have a triangle pattern unfolding here, and the decline on Friday kind of points to that also. So I think throughout this week, we'll be seeing closeout of, maybe by Wednesday, we might see the closeout of this triangle, possible wave 4, and then we should see a further move down in a 5th wave into support. Okay. And that is silver done. Okay, let's move on to Treasuries. This is the count I'm working with here. This is the 4-hour chart in Treasuries. This is a wave 3 low back in late February there, and we've got this contraction triangle happening ever since then. So we've got about 6 months of stagnation within the markets. So I think that may have come to an end over the last couple of weeks. So what we're watching is a break of the previous wave D there, and that wave D low would be in the region of the 118.80s. So 118.80 would be the level to watch over the next week or so to see if we get a break of that level and we kind of confirm the end of that triangle. And the triangle is a triangle wave 4, so we should see a decline. It may well be a further decline. It might get down to the 115s before this closes out. But we'll see one step at a time. What I'm dealing with now on the 4-hour chart is a possible 5 waves down in a wave 1, with maybe off Fridays or off Thursday's low. We could be talking about, Friday's low. We could be talking about the start of wave 2 here. So we have 1, 2, an extended wave 3, a short wave 4, 3 waves up, and a spike down in 5 waves into wave 5. So off that 5th wave low on Friday there, we've had, or Thursday evening, sorry, we've had maybe an initial move up in wave A. So we might see 3 waves develop this week in a possible second wave. So we want to see the 120 level hold as wave 2 completes, and then we'll be looking for a lower degree 1-2 off that eventual high to give us a treasury sell signal there as well. Okay, so that does the 9 markets. I still have to keep on. It takes me a long time to adjust to changes. So that's the 9 markets complete. Again, if you want to check out bullwaves.org, and if you want to update your profile, or if you want to open a new account, just check out the prices page there. And also get on our email list. I always do updates throughout the week, so you might enjoy them. Okay, that's Sunday evening. I'm off to get some dinner, and we'll talk to you tomorrow at the close. Bye-bye.